people, I welcome you back to Caroline's Online Academy in another video. In this series of videos, we're learning the various concepts involved in accounting for share capital. And currently, we are in reissue of forfeited shares, my dear children. And in the previous video, we solved a problem in which shares were forfeited from more than one person and reissued to another person. There was a partial reissue. Partial reissue means you don't reissue all the shares forfeited, you issue part of the shares forfeited. Understood? And we have another question here, my dear children, and this is also a case of partial reissue. Let me read the question for you. Shreya Limited issued 1 lakh shares of rupees 100 each at a premium of 20% payable as follows. Application 25, allotment 30, premium 15, first call 30, premium 5, second call remaining. The company received 1 lakh applications and full allotment was made. Renuka holding 2,000 shares did not pay allotment money and her shares were forfeited. 600 of the forfeited shares were reissued to Badru for 80 as fully paid up, past necessary journal entries. Understood or not, my dear children? In case you're wondering where I get all these names from, all of them are my students, my darlings who just passed out and who passed out a year before. Nice kids. Anyway. So yeah, Renuka did not pay allotment money and her shares are to be forfeited, as you can clearly see in the question. Renuka has not paid allotment money and premium was collectible in allotment and in first call, so that she hasn't paid. If she has not paid the premium, you go to debit securities premium account when you're forfeiting. The securities premium account will be debited, share capital account will be debited, and share forfeiture account will be credited with the profit on forfeiture, share forfeiture account, and calls in arrears will be credited with the amount called up but unpaid premium as well as capital portion. Renuka's shares forfeited. Actually, I'd like to tell the story of all of these kids, my dear children. All of them have beautiful comeback stories, beautiful stories in which they fought back. They really did well. Some kids who did well from the beginning, who worked it out and who had a clear mindset. Some people who struggled and then came out on top. A lot of beautiful stories that I wish I could share with you sometime. I'll do that sometime. Right? Anyway, so securities premium, we will debit it with the amount of securities premium called up but unpaid. In this question, it is 1,000 and Renuka was holding 2,000 shares. I'm sorry, 20 and Renuka was holding 2,000 shares. That'll be 40,000. I'll make it a little smaller. Yeah. And share capital will be debited with the amount called up as capital multiplied by the number of shares held by the shareholder. Number of shares forfeited from the shareholder, which happens to be 200 and 2,000, which is 2 lakh 200 because they've not told when the shares have been forfeited, and so it is assumed that the forfeiture has happened after all the calls have been made, and therefore the entire amount has been called up. The capital portion of called up value is a face value, which is 100. Share forfeiture will be credited with the amount paid up. As you can see, Renuka did not pay the allotment money, so she would have only paid the application money, which happens to be 25, and that multiplied by 2,000 will give you 50,000. Understood or not, my dear children? And calls and arrears will be what, my dear children? The unpaid amount of capital and premium. So paid up amount is only 25. The unpaid amount out of 120 minus the issue price minus 25 is 95. And 95, my dear children, on one share. On a total number of shares forfeited 2,000, it is 95 into 2,000, which is 1,90,000. Understood or not, my dear children? The next thing that we got to do is to reissue the shares. As you can clearly see, the shares were reissued to Badru for rupees 80 as fully paid. Understood or not, my dear children? So we have reissued the shares for rupees 80 as fully paid up, which means what? Fully paid up means 100 rupees paid up. We got 80 rupees and we are telling that 100 rupees paid up, boss. If you're saying that, what does it mean? We are given a discount of 20 rupees. Understood or not, my dear children? So the journal entry will be bank account debit. So when you're reissuing the shares, you're receiving money in the bank. Bank is an asset. Asset increase, you got to debit it. So bank account debit, and you're giving discount share forfeiture account will be debited because you will be giving discount out of the amount you already credited to share forfeiture as profit on forfeiture. Understood or not, my dear children? And you reissue shares. Capital is increasing, and the share capital, so liability account will be credited. Shares reissued to Badru Understood or not, my dear? You guys got to write the correct narration. Okay, I'm writing the shorter version because I want to save time for you. I just want to teach you the concepts here. Understood? Now the shares were reissued for 80. Only 600 shares were reissued, so it is 80 into 600. 80 into 600, which is 48,000. The discount given on the shares is 20 rupees per share. The 20 into 600 is 12,000. Shares have been considered as fully paid up. Fully paid up means 100 rupees paid up, face value paid up, so it will be 60,000. Now we got to do the journal entry for forfeiture, my dear. Transferring the capital reserve, transferring to capital reserve, my dear children. The journal entry is profit on reissue transfer to capital reserve. The journal entry share forfeiture account debit to capital reserve account, profit on reissue transferred to capital reserve. And as I told you, got to do the working note. The working note is what, my dear children? It is computation of profit on ratio. And in this question, if you see, there are not, we don't have two shareholders. We only have one shareholder. Am I right or not, my dear children? And that one shareholder is who? Renuka, and 600 of the shares have been reissued. Understood or not, my dear children? The profit on forfeiture per share in this question is also 50,000. Total amount credited to share forfeiture account is 50,000 divided by the total number of shares forfeited. 50,000 divided by 2,000 gives you 25,000. The loss on reissue per share in this question is also 20 rupees, so that is minus 20. The profit on reissue per share will be profit on forfeiture per share minus loss on reissue per share will give you the profit on reissue per share. Understood or not, my dear children? And the total profit on reissue will be what, my dear children? Total number of shares reissued, which is 600 multiplied by 5 rupees, the profit on reissue per share, which is 3,000. Only 3,000 will be credited to capital. Understood or not, my dear children? So this is another question in which we had partial reissue. With this, we have come to the end of this video. I'll catch up with you guys with another video explaining reissue. We have a couple of more videos to go with different situations. So that we'll be doing in the next video. I hope to see you again. You people like, share, subscribe, and comment. And that's all, my dear children. Just have fun and learn properly. Okay. Bye bye.